Hello students, in this video I will cover the most important topic of income tax, that is profit and gains from business and profession. Here I will cover the introduction part and pro forma of calculation of business income, as well as the most significant is different types of problems are covered. This video will be little bit longer, but I can assure you that after watching this video you will be in a position to do all the university level across the India, all the university level problems of profit and gains from business and profession. So this video is very significant for the students of BCom, MCom, CS and CMA students even. Profit and gains from business and profession is the most significant incomes of the Assessee. This is the third head of income out of the 5 heads. So tax collection from this source is very huge for the central government. Therefore, computation of business and profession income is a very complex as well as very significant one for the income tax officers as well as assessee even. Now we will understand the definition of business. The general definition of business is refers to an economic activity carried out for earning profits. But according to section 2 subsection 13 of the Income Tax Act 1961, it gives us a clear definition. It says any trade, commerce, manufacture or any adventure are concern in the name of trade, commerce and manufacture. In the sense what? Any organization which is doing trading, commerce, manufacturing or any adventure kind of a thing is refers to as a business. So this business income will be calculated here. Now we will further proceed. This is the format of computation of business profit or business income. It will be prepared based on the profit and loss account provided in the question. So in the first heading we have taken balance as per profit and loss account, the net profit which will be there in the profit and loss account prepared by the organization. That profit and loss account we will take, to that we will add expenses debited but disallowed under this act. In the sense what? Whenever the profit and loss account prepared, the profit and loss account prepared might be as per the rules and regulations of the other competent authorities. But for the income tax purpose, a specific profit and loss account should be prepared and profit should be calculated by considering the expenses which are allowed by Income Tax Act and considering the incomes which are allowed by Income Tax Act. So here what we have to do, we will be given a profit and loss account. We do reverse calculation to that profit and loss account. In the sense, the net profit will be considered. First, we will add expenses debited but disallowed under this act. In the sense, already the expenses which have been debited to profit and loss account, which are disallowed as per Income Tax Act. By debiting those expenses, we have reduced our profit. To get the actual profit, we should add back those expenses. The list of expenses already furnished here. You can easily go through all those expenses. I will just briefly read out all provisions. Provisions in the name of bad debts, depreciation, income tax is disallowed as per Income Tax Act. All taxes, income tax, advance income tax, wealth tax are disallowed. Only sales tax, excise duty and GST and local taxes are allowed. Rent paid to self, our own building in which we are doing business, we will write rent. That is disallowed since owner cannot charge rent from his own building. All capital expenses on social scientific research is disallowed. All capital losses, charities and donations, these expenses not at all related to business. This is whatever expenses that we are adding back which are not related to business operations, these are not allowed by the Income Tax Act. So after donation, all expenses related to other heads of income like income from salary, income from house property, income from capital gain, income from other sources, those expenses should be taken in that head. Therefore, we don't consider here. Cultivation expenses, agricultural income is fully exempted. Any interest on capital, unless the amount is borrowed, interest on capital is disallowed. Any personal expenses, drawings, depreciation, if wrongly debited, gift and presents, any type of penalty, fine, any payment to partner by way of salary. So like this, all these expenses are disallowed as per Income Tax Act, already been debited. Now we will add to get the actual profit. and from the amount what we get, we will deduct less expenses allowed but not debited. These expenses already allowed as per Income Tax Act, but we did not debit to our profit and loss account. Now we will reduce these expenses like actual bad debt, depreciation as per Income Tax Act, any expenditure incurred according to the provisions of the law, difference due to under debiting of stock, these expenses. Then less incomes credited but disallowed as per Income Tax Act are under this act. In the sense, already some of the incomes that we have already been credited to profit and loss account which are not allowed as per Income Tax Act under the head of profit and gains from the business and profession. Those incomes we will reduce, such as income exempted from tax. Certain incomes are completely exempted from tax, certain incomes taxable under other heads. So like this we will deduct. So precisely what we are trying to do here, we are trying to consider only those expenses which are related to business and consider those income which are related to business. We take incomes which are not related, we consider expenses which are not related will be added back, not allowed as per income tax which have already been debited added back, and incomes which have already credited will be deducted. This is the precise way of doing the problem. This is the format. Further we will proceed, then you will understand how to solve the problem. We will take up the first question. The question says, Mr. Rawat gives you the following particulars from his accounts for the year ended 31st March 2024. Net profit as per profit and loss account before charging the following. In the sense, the following items that we will be studying, those expenses are incomes we did not consider while arriving at a profit of 2,75,000. It does means capital expenditure on family planning, it is purely disallowed expenditure. Lump sum consideration for purchase of technical know-how developed in government laboratories. See, the technical know-how is an intangible asset. On that 25% depreciation will be charged. Please bear in mind, percentage of depreciation is 25% on all intangible asset. Entertainment expenditure is allowed since it is given, it is spent on what we call entertaining the customers. Expenditure on acquisition of patent right, again it is an intangible asset. Expenditure on advertisement paid in cash. So 8,000, since it is less than 10,000, then it is allowed as deduction. Provision for GST, any provision is disallowed. He paid 20,000 on 27/6/2024 and 7,000 on 10/11/2024. Due date of filing of return is 31/7. Before due date, whatever we paid, that is allowed as deduction. GST. Donation given to Rajasthan University for research. Any donation given to universities for research is fully allowed on social sciences. Compute income from business for the previous years. So we can easily find out the answers. Now we have taken an again question to understand better. Now see the answer. When you come to the answer, we have taken net profit as per profit and loss account 2,75,000 less allowed expenditure as per Income Tax Act. In the sense, these expenses already not been considered before charging the following he has given. Now we will consider less expenses. Which expenses? Depreciation on technical know-how. Already I told you that intangible asset backed depreciation at the rate of 25%. So 90,000 into 25% will be 22,500. Then entertainment expenditures is allowed. Depreciation on patent rights, again 25%. Advertisement expenditure is allowed since it is less than 10,000 paid in cash. Donation given to Rajasthan University for social sciences is also allowed. Payment of GST before due date 20,000 is allowed. So if you deduct all these expenses, you will be getting 1,23,500 is your profit. So this is the way you need to calculate the profit. Now we'll take up the next question. So if you see the next question, following is the profit and loss account of Kesari Malya for the previous year 2023-24. We have given entire profit and loss account, salaries, rent, commission, income tax. So income tax is disallowed. Entertainment expenses, commission paid to collect the interest on securities, it is disallowed. Embezzlement by cashier, in the sense cashier ran away with cash, that is allowed as deduction. Municipal taxes disallowed. Bad debt allowed, he has given. Repairs to house disallowed. Official expenses, office expenses allowed. Depreciation we will check any adjustment. LIC premium is completely disallowed. Gross profit is given. Bank interest is disallowed. Bad debts recovered. Last year allowed. Last year allowed in the sense now it has been recovered. Rent from house property, interest on commercial securities. These two are even disallowed. Depreciation, actual depreciation is only 4,500. How much did we charge depreciation? 5,000. But allowed is only 4,500. How much excess we have charged? 500. That is disallowed expenditure towards depreciation. So now we have taken the question again. Now see the answer. Net profit as per profit and loss account, that is 40,100. Whatever we have given, 40,100 we have taken. Add expenses debited but disallowed. Which expenses which are debited already but disallowed? That is income tax, first one. See, income tax is straight away disallowed because once we calculate profit, how income tax will be determined. That's the reason why income tax 2,600 is disallowed. Commission paid to collect the interest on securities. Interest on securities comes under income from other sources. So collection charges will also go there. That's the reason why this expenses even is disallowed. Then municipal taxes paid on house property. This is disallowed. It should be considered while calculating income from house property. Repairs to the same house is also disallowed. Then depreciation, actually we charge 5,000 but actually allowed is 4,500 only. Therefore excess whatever we charge 500, that will be disallowed expenditure. Then LIC premium, life insurance premium paid on the life of the entrepreneur, that is owner. So that will be the personal expenditure. Therefore LIC premium is also disallowed. So all these expenses are disallowed. The summation comes to 6,670. The total will be 46,770. From this we will deduct incomes credited but disallowed. That is bank interest is an income from other source. Then income from house property, that is also disallowed. Interest on commercial securities is also disallowed income. These incomes comes to 7,250 we have reduced. So the profit comes to 39,520 is the business profit. Like this we have to calculate. So we will proceed to the next question. When you come to the next question, if you see, again we have given profit and loss account, then expenses we have given, that is salaries, wages, trade expenses, everything is available. Then gross profit, rent from house property, then additional info. Depreciation allowable is 500. So how much depreciation did we charge in P&L account? Depreciation we have charged 1,000. But allowed is 500. How much excess we have charged? 500. That 500 is disallowed depreciation, that should be added. Right? The second point is he owns another house which is self-occupied and for which he has to pay 12,000 as interest on loan taken to construct the house or repairs the house, renovate the house. This interest on loan taken for its repairs is allowed expenditure as per income from house property. Therefore, we can calculate income from house property even. So this is the information that we have provided. So we can start. So when you see the answer, net profit as per profit and loss account, that is 24,375. Add expenses debited but disallowed. So first one is household expenses is straight away disallowed because we are calculating business profit. Fire insurance premium on house property, it is not a business expenditure, disallowed. Then reserve for bad debt, all the reserves are disallowed. Bad debt, depreciation, any reserves. LIC premium is disallowed. Donation to approved school, any donation to school is disallowed but given to university for social sciences is allowed. Income tax is disallowed. Repairs to house property is disallowed. Interest on capital is straight away disallowed. And we spoke about the depreciation, how much excess depreciation we charge, 500, that is disallowed. So total expenditure comes to 11,300 added back. So our business profit is 35,675 minus incomes credited but disallowed. Rent from house property is disallowed. We have to take income from house property. Dividend from Indian company, this is income from other source. So collectively 8,400 we have reduced. So we got 27,275 as business profit. Once we calculate business profit, we have to calculate income from house property. Gross annual value we have taken, let out house property is 6,000, self-occupied nil. Why did we take 6,000? Because in the P&L account we have provided rent from house property 6,000. This income we did not consider while calculating business profit. This income belongs to income from house property. So now we will consider GAV 6,000. Less municipal taxes, we have not provided any municipal taxes. Annual value is 6,000 for let out and self-occupied will be nil. Deductions under section 24. Already I made a video on income from house property. I will share the link of that a playlist in the top right corner in the I button as well as in the description. You can watch for better understanding how to calculate income from house property. So now see the deduction under section 24. Standard deduction at the rate of 30% on NAV, that is 1800. Interest on loan taken to repair, renovate, construct. All this is allowed as deduction. So 12,000 on self-occupied even. So income from let out house is 4,200 and loss from self-occupied is 12,000. So once we calculate business income, income from house property, then we can calculate the GTA. GTA stands for gross total income. Income from business is 27,275. Loss from house property, that is income 4,200 minus 12,000 is the loss. So net loss is 7,800. Income from other sources is 2,400. How did I take this 2,400? That is dividend income given in P&L account credit side. So when you make the summation, this loss of house property will be adjusted toward the business profit and in other sources even. So gross total income of the assessee is 21,875. This is the precise way of calculation of income from all the sources, that is house property and business, and calculation of GTA. I hope I have given you. This is the very important question as far as the exams are concerned. I wish you all the best. Thanks for watching the video. Do subscribe my channel, Mentor the Trusted Guide, and motivate me to make more qualitative and informative videos. Thank you very much.